the IWM.
Hello, Basil.
Ben,
Basil?
you're there. How are you?
There we go. Yeah, I think there's a little button that wasn't pushed. So, oh, I'm great. Yeah, you know, your little commentary there. Who would have guessed, right? Down 4,000, up 4,000 in 2 months. I mean, just mind-boggling.
Well,
So
4,000 points, Ben. 4,000 points in 15 days, but almost 2 months to get back. But it's incredible because we've had 1 year's worth of normal, a really good year has been done in less than 2 months. All right, go ahead. You got a question?
Yeah. No, it really is incredible. So, two-part question. SMH. What I'm thinking about doing, strongly considering a small portion in an option. And my question to you is a naked put. And you know, what are your thoughts on March versus April? So, you know, March obviously is going to be a lot less expensive.
Yeah, let me just give me 1 second. Let me look at my calendar. We've got Friday the 1st. Oh, Friday the 1st. That means it's an even shorter week, 3 weeks.
Well,
Three
no,
Fridays.
it would be like I think it was the third week of March.
So you'd go, no, it would be the third. It would be the third Friday. That's 15th of March.
Yeah.
Or April. Right. Okay. Let me do this because if anything's going to happen, okay. Let me give a scenario. Let's imagine the Fed comes out, and the next thing we know, the Dow is trading at 26,130, and the S&P is at 20. Let's just make it 2,800 for a round number, right? By this afternoon or tomorrow morning. What that does basically is it recycles in a sense that it raises the base of support proportionately, and at the same time, it will bring in a whole bunch of people either short covering or brand new buyers. And that would say to me that if that price holds, if the 2600s holds all the way through Friday, then what we've got is basically what I would call like an instant restart. We've got a recycle, and that recycle says that until we get really bad news, you're not going to go, you'd have to go down. Let's take the Dow, for instance. You'd have to go down 1,000 points to 1,500 points just to get back to where you were a couple of days ago or a week ago. So that's just going to have to be a lot of bad news. That's number one. Number two is in the semiconductor index, acting quite well today. Yesterday was 2 days was nothing. Today is actually quite nice. It went to 104.03. I'm looking at, we've got a break coming up. You know, I'm going to, if you got just a moment, I got two things I want to do during the break. I want to look at some.
Yeah, the second part was you know, regardless of the Fed and China, you know, technically, aren't we at a point where it doesn't matter? Something.
We're back with Ben in Tallahassee. We're looking at the SMH. That's the semiconductor ETF trading at 103.61, up $1.18. So then I just went through, that's what I wanted to do in the break. I went through Intel. Intel is down. It's down 0.18, not a big deal, but it's at F/C. I looked at LRCX, which is Lam Research. It's at a peak D and holding tight. I looked at Applied Materials. These are the big ones, except there's one that really has been a monster. And so Applied Material is under the 200-period moving average after a doji peak A. And Xilinx, one of my favorite stocks that we've never owned. I don't know why not, because it's just been a spectacular winner for years and years and years. It's trading with a potential peak D here at 119.78, and just a month ago it was in the 90. So this is a spectacular move. So I'm not even sure what's getting the semiconductor index to this +1, plus 82. That is. Whoops, wrong one. And so I'm looking at this and I'm saying, if it wasn't for the Fed announcement today, everything I'm looking at suggests, look at the single leg A in the semiconductor from the weekly chart, holds the 200-period moving average exactly. It makes a left side, right side price time within 2 weeks, almost exact at 80.71. Retest the 80.71 back from, I think, summer of 2017. Now you've got a single leg A up that is up 20 20 points, 23 points. You would expect under normal conditions that there be some kind of a pullback. A pullback.
Well, I guess that's my point. That's my point, Basil, because I'm mixing that in with, I think you had some pretty good, I guess let's just call it general intelligence, not like you got inside stock trading advice, but that the semis are due for a breather and in 19, and that was, prior to this 24% run up. So I'm kind of thinking we're a little bit in the world of make-believe right now.
So now this is what I want you to get to. If there is going to be a pullback, there are two ways to do it. One is that the Fed comes out and the market kind of says, we're not quite sure what the Fed is going to do because they're talking about the data that they're looking at. Actually, the data they're looking at should still be pretty darn good. So they should be looking out towards possibly raising rates, even though I don't think they need to, but that's something else. Now, here's the other thing. If I'm looking at this, it's either going to be just a sudden surprise sell-off, and then you start getting the bad news, and that would say that the SMHs have to go down below 99. 97 is going to be the big test of support, and then a break of that goes to the 96, 95 area. So it's either really sudden, or there's just going to be a 3-week slow grind to the downside as we see maybe the commodity area becomes favorites, and all of a sudden money starts coming out of the other sectors and goes into things like copper, like the metals that have really taken off. That might be a scenario that we're looking at. So I'm going to say to you, the April you'll pay more for, but you'll have more time. If this is going to work, the third Friday of March, you should already be down at the 97 to 96 area. So if we're still in 100, 100 or 99 and haven't really broken down, I'm not sure April is going to make that much difference at that point. So I'm inclined to think that it would be I'd go for the nearer time frame. That's just my thinking. Yeah, you're going to do the trade.
You bring up a really good point. If it's not going to work in March, it's not going to work in April. Yeah.
That's my thinking. Well, it's not that it won't work. It's just that, wow, if you hold steady, people, I think that a chunk of people have missed out completely getting in. I know people that got out in time or didn't do anything, but they've not put money back at all. They're waiting for the big pullback. So I'm looking at this and I'm saying, wow.
Okay, I appreciate that. I think that was the best thing I heard is what you just said. So that's my option. So then here's my other question. I mean, we're talking 5,000 points, down and then up. I mean, I just find this almost truly unbelievable, and it's almost like, okay, a Fed says one or two sentences. Does this just have a hallmark, computer-based trading written all over it?
I didn't want to really talk about it now, but now you forced me to do that.
Down and up and all over the place.
Ben, there is only one thing that President Trump has left, because he's going to get no wins whatsoever because of the divided parties, and that's the stock market. Somehow, some way, this is a Trump market. He's made it the Trump market. It's his signature tune, and I think that one way or the other, he's going to have to make this thing work, and he's going to have to make it work all the way through the fall of next year. So I think that major support is in the Dow, somewhere around the 24,500s at this particular point. But I think that we've already begun something that's very important.
Well, the other to that point, Powell seemed to not really care, who was president, but maybe between his statement at Christmas and now, he got a few emails or maybe even a few tweets.
Yeah, I would not be surprised if today he starts to assert some kind of authority in the wording.
Yeah.
And that's really what I'm looking at. So good luck with your trade. Let me know how it goes.
Yeah. All right, Basil. We're on the roller coaster together.
Thank you for calling. That was Ben in Tallahassee.